Wednesday, August 6th, market analysis, Stan Ehrlich, 1:45 California time, and we have stock indexes first, futures second, and some stocks third, and other topics hot on the list for the next couple of months is going to be the October lows. Normally, we top out in August or September. That's kind of silly to say. It's a month or two before October. But historically, that is evident as well. It's not just because it's a month or two before October. So, last week we had a bearish engulfing ER sell signal. In some cases, the indexes had two of them. One on Tuesday that didn't work, period. Wasn't terrible. But Thursday of last week, great. Friday, a big sharp break for the spider. The high on Thursday to the low on Friday was a 20-point break. Pretty significant, especially since that also increases the volatility indexes because volatility was certainly picking up relative to the previous few weeks. We came back up on Monday, recovering approximately 50% of the break over Thursday and Friday. But Tuesday was also approximately the same highs as Friday and Monday. And today, we have an outside up day bullish engulfing, which has turned green on this extremely rare circumstance. I don't remember seeing this before, but with my custom RSI, we were overbought at the rally highs on Thursday, and by the time we got to the lows on Friday, we were oversold in basically 24 hours. So having been oversold on Friday and Monday as well, having an outside update today would qualify for a bullish engulfing, but I'm very, very skeptical. I don't like saying this, but I can't hide the green bar. I don't think this is going to work, frankly, mostly because of the October lows, that has an extremely strong multi-decade track record of being better than 90% of the years. There was a low in October of some significance. Sometimes very, very important. This year could set up to be one of those damn big breaks. I'm not kidding. I'm not going to totally rule out all the way back to the April lows and even more maybe, but we're not doing that at the moment. Today was a fairly firm day, up 4 to 5 points, give or take a little, closing near its high. It's a new high close for the previous 4 days since Friday's low close. But it doesn't seem to have any zip pop bang to it, so I could easily expect to see an all of a sudden break Thursday and or Friday, but it's not happening. So I don't start to do anything about that until it starts to get below today's low and yesterday's low. That will perk my interest a lot. And of course, if we get below last Friday's low, then we're on our way down already, because I expect that to be a significant downside breakout. Next chart. And it's only the 1 minute data, or 5 minute data rather, for the E-mini, so I'm going to fly through this pretty quickly. Nothing going on. We have the spider. We have a slightly higher close. Basically, of course, the same story as the E-mini. The gap is closed. Next, and we still have on top of the market the red bearish engulfing. And the 5 minute skip it. And we have the red bearish engulfing also in the QQQ in the high day so far. This rally is a little troubling. It's a little more than I wanted, but it doesn't kill my bearish expectations. Next, and the 5 minute chart. Next, we've got the NASDAQ futures contract with another bearish engulfing on the top of the market and a bullish engulfing today, which I don't trust. It was barely, in fact, I'm questioning whether that's actually the case. I think the code might have a little problem. The low there was 24.84, so yes, it got oversold. It turned yellow, yeah. So it could technically qualify for a bullish engulfing, but I'm extremely skeptical, just like the E-mini. But we'll see. I'm certainly at the moment not as confident as I was a day or 3 ago. Next, and we'll see what happens. And there's no sell signal up here. We just got a double top of the first high being a bearish engulfing ER sell signal. And we've already been a little bit more than halfway down to the minimum objective, which is around 42,743. or at the bottom of the support area, and we bounced off the high of the support area on Friday. But it doesn't seem to want to make new highs by any significant amount for now, the third day, basically. So is it rolling over and starting to head back down? I have to say I favor slightly from, 60, 70%. So, okay, we got the 5 minute. Now, the last one, Russell, doesn't behave like the others, not the same. We hit a resistance level. We backed off from it, closing around unchanged, a little lower. No bearish engulfing, nothing is super important. So we're a little bit between a rock and a hard spot. I'm going to be a little on the bearish side also. Nothing profound. And we have the 5 minute. Bonds are teasing here. We have had a closing price today right about on the neckline with a low that was significantly below the neckline, which is another no-no like it did 2 days earlier. But the close, again, was not a violation of the major rule, don't ever close below the neckline once you're on the other side of it, in this case, above it. So, at support area, at the neckline, are we ready to pop back up again and start to go up to 62, to 122 plus? Or is this damn thing going to fail and start to close below today's close? And that would start to be a violation. Very important. Make it or break it. 10-year notes, minor new highs, couldn't follow through, backed up a little bit, no signals, came close to being overbought, but not quite, and around previous highs. So it looks like it's about to step back down a little bit more as well, at least to the support area. Yeah, right about there. And maybe even lower. We have a bearish engulfing ER sell signal today in crude oil. I don't like seeing these things 1, 2, 3, 4 days after the last overbought condition, but it still qualifies. Plus, it's down quite a bit from the highest high. But this could still be a catapult into the support area, through the bottom of the support area, and dropping off a lot more, excuse me, below 61, let's say, and very quickly. That's what I have to say. I think it's going to be a catapult. We already started to work lower from significantly higher a few days ago. As a matter of fact, that hasn't had one up day so far after being overbought. So, and we're also not too far away from oversold already. A little skeptical, but I got to think more to the downside, period. Okay, we got a little bit of a bounce yesterday and today in the natural gas, which has a head and shoulder top that's been working very, very nicely. So I could expect easily, with no problem at all, 319, maybe even 327-ish, and even a little higher. But the whole point here is the rally shouldn't last very long, shouldn't go up very much, and should probably stay, except there's a small gap there I forgot about, at least below 3.5, and I don't even think it's going to get that high. We've already been down to approximately 1/3 the downside objective, which is at 1.1. This is looking very nice so far, just waiting for it to start to slide back down. Next, heating oil. New low for the move down, unchanged close. Rally didn't hold. So we've got a series of lower highs here over the last 6 days. Support, I think, is not going to hold at 2.23. I think we're about to break some lows made in late June and come down to probably 2.1. The next significant support here. Yeah, about 2.1. So, next, gold, sideways, doji, nothing going on from yesterday. Still have a sell signal on the high of the market in overbought conditions and in over a significant resistance area as well. So that worked out perfectly. 1, 2, 3 days down, a little up, 4, 5 days down, finally a low in support. This bounce, I think, is about to die. I wouldn't be surprised to see new lows in the next week or two. Next, silver. Pretty much the same comment. RSI doesn't help at all. But let's go sideways a little while. Maybe I can build something out of that. Next, platinum. I really don't have a good thing to say here. Maybe a little bit higher. I'm sorry, I can't get something solid going. So at the moment, copper, we all saw the copper market have a bearish engulfing on July 28th, which actually led 2 days later to this unbelievably huge crash. The biggest down move, probably dollar-wise, percentage-wise, etc., ever for copper. Follow through the next day. The bounce was nothing so far. Just languishing around here, the lows. I think it's going to fall apart again very soon after it, gets its head stopped spinning. And maybe there'll be a little rally in the meantime, but doubtful. Next, grain market. Beans. Again, a new low for beans. The only thing that's going to save the grains, in my opinion, is going to be some big reversal. We're oversold again. I got to go maybe a bounce sideways to lower in the next couple, 3 weeks, but maybe a bounce in the middle. And get rid of that. Wait. Good. Oh, we get some things going here. Stop. Good. Sorry about that. So new lows for the trend. New low close below previous lows. Maybe we'll get another day or two of oversold and then come back. Could bounce off of 975. I have to be bearish with the possibility of a small bounce right here. Next, soybean oil had a bearish engulfing yesterday. I talked about that being maybe the kiss of death. So far, it's managing to hold on by a shoestring, and a tiny lower low. Close is not strong at all. I'm afraid it's about to fall apart. This head and shoulder bottom did provide us so far with approximately 50%, maybe a little over, the minimum upside objective, which is supposed to be 62.62. Now, this doesn't kill the whole thing just because they got a bearish engulfing. If you trust it, it probably will. That's why I'm kind of bummed out about it. If you don't trust the bearish engulfing, then holding in this ballpark area doesn't violate any major rules as far as the head and shoulder is concerned. It's still good. The only thing that's going to do that really is closing below this neckline. That definitely kills it. We probably shouldn't get all that close to it in the first place. That's a little unusual. Next. Soybean meal. Okay, bounces over. Topped out around a previous high a couple of weeks ago. Dropped off. Won't be surprised to see the low being tested and new lows for the whole move in a few days. Next. Well, we already did that in corn again. Still heading down even faster, getting more oversold. So this could be a climactic sell-off if it gets terribly, terribly oversold in the next couple, 3 days or something. But that's not that bad so far. This is just typical. So if you're talking typical, bounce, 388, 391, 397-ish. That's about it. Then down. Next, oversold, new lows to the trend. Wheat, same story. Bounce up to 533. Can't help it. Oversold is the only thing that's going to cause the bounce. Otherwise, it could just keep slipping. And shell. A nice rally, but it didn't hold. In fact, it wiped out some buy stops and all of a sudden right back down. Nobody that's long today or bought today pretty much likes what they've got. I think they feel like they got caught in a bull trap, and that's what it looks like. That would imply that we're going to slip off some more, break some lows, hit some more sell stops, and maybe come off some a little bit more, and that's what I think is going to happen. Too bad we didn't get a red bearish engulfing. Next, we got a nice pop-up on Apple, but again, it's just coming back up into a resistance area where it's topped out before. You got to break through. We're still between a rock and a hard spot, a spot where we're still leaning on one of them. Maybe it's going to turn down again. Next, Tesla, between the rock and the hard spot, still inside this pennant formation, now right about the middle of it, waiting for a signal or a breakout. And NVIDIA, holding the bull trend line, which was just tested a few days ago accurately. But the problem is we have this bearish engulfing ER sell signal on July 31st, Thursday, like the other indexes of last week. So that's a little skeptical. I would be interested in going short if I could get a handle on maybe new lows for 2 or 3 days, and then short as long as the risk wasn't too much. Always, always, always consider the risk, your money management techniques, etc. Where is your protective stop? Buy stop or sell stop one way or the other. Okay, looking for a dip back down again, frankly. And we're back to the E-mini. You guys have a great day and profitable trading to you.